Do you want to build an endless stream of income, have someone else pay your mortgage, and build your net worth steadily over time? If so, this video is for you. Hi, my name is Matt from Shoe Capital, where I talk about all things personal finance, investing, and business. And today's topic, it's all about renting your property instead of selling it. So let's first talk about why you might not want to sell your home when you're ready to leave. Let's say perhaps this is the first home you've ever lived in and purchased yourself. You're very happy with it. You live in a good neighborhood. Traditional advice is to seek a realtor, put it on the market, sell it, hopefully net some gains at the end, and use that toward the purchase of your next home. Good standard advice, and maybe worth considering the way you want to go. However, what they don't tell you is you're going to pay a tremendous amount of transaction costs to sell a home. Typically in the United States, the buyer and seller's commissions for real estate agents is 3% each, so that's 6% right there, plus any repairs and other state required transaction costs can easily bring this percentage up to 10% of your home's value. So if you have a $300,000 home, you could very easily pay $30,000 in commissions and fees to sell your home, which is pretty dramatic. So something else to consider instead that requires a little bit more work and due diligence is renting your property. And there's a lot of things to consider when going about this. The first is, do you want access to the equity that currently exists in your home before you rent it? If so, you want to look into a refinance or a home equity line of credit so you can draw out all that equity and have that cash in your checking account available for to use on your next purchase. After you've rented the property, the terms you're going to be able to get on that credit won't be as good. So you definitely want to do that beforehand as part of your planning. The next consideration is, what condition is your home in? Do the toilets work? Do all the appliances and fixtures work? If not, you definitely want to repair these. Also, cosmetically, how does it present? Is the paint in good condition? Is it a relatively modern color? Do the fixtures and doorknobs match the decor overall in the home? These are some considerations you might want to update that are low cost that will dramatically increase the quality of your tenant and the rent you can receive for the property by making it more modern and accommodating. The next consideration is, how are you going to find a quality tenant quickly? So there are a couple key things to do with this. First, you're going to need good pictures of the property under great lighting conditions. You can consider doing this yourself, hiring it out, or making it part of your property manager's mission to do. I highly recommend you do a thorough cleaning and decluttering of your home first before you take these pictures, and definitely take some of your own so you have some samples to compare against others who you might consider hiring to do this. The next thing you want to do is look for a property manager. Now, the best way, in my opinion, to find one is to look in your local area by going on Google, Yelp, or whatever your favorite search engine is. You want to read the reviews both from the tenant and landlord's perspective, and then see how happy they are with a property management company from both sides. In addition, you want to get a copy of the contract they typically use and ask them for what their fees are for their services, so that when you find the one you like, you can negotiate for the best terms. Now, what does a quality property manager do for you? Well, they handle all the tenant's needs. They take you completely out of the loop in terms of any problems or issues that arise during the leasing period. They take care of all the collections and payments. They send you a tax form at the end of the year that makes it very easy to file. And they also create a huge network of vendors who are available on tap at a moment's notice to take care of any maintenance issues that show up in your property. So after you've hired a quality property manager, you've taken your photos, you've gotten your listing posted, how do you know what to charge? Well, you do some quick market research, you find all the comps for rent in your area, and you decide how you want to price it. My recommendation is that you price it very aggressively so that you have the largest pool of applicants to choose from, so you can have the highest quality tenant who will be the least amount of problems, who will pay consistently, who will take good care of your place, and hopefully stay a long time. Now, there's some popular screening criteria that make sure you have a great tenant any property manager you select should consider, and these include a very strong income and making sure the rent is not too large a portion of their income. In addition to a high credit score, you want a tenant with a credit score above 700, because these tenants have a lot to lose if they were to not make orderly payments on time. They don't want to ruin their credit. They want to make good on their commitment to you. So unless there's a dramatic issue in their life, they're probably going to be a very consistent tenant. So this will make your landlord experience much better. And then with all these things set up, you're just going to be sitting back, getting your monthly checks electronically deposited into your account or via mail. And occasionally you'll get an update from your property manager telling you something has broken in the property. They'll give you an estimate based on their experience, and they'll tell you they're going to send someone out to make that repair. And you can even set a threshold so it'll automatically do repairs below a certain amount. And then at the end of the year, you'll get your tax statement and you'll be able to file as a business. And the greatest news here, if you're running your rental property as a business, is you'll probably won't have any taxes owed at the end of the year. And you may ask, why is this? Well, a couple of reasons. You have expenses and depreciation. So depreciation is the result of your home is aging over time. It's becoming less valuable. So the IRS allows you to deduct a portion of that every year, which can be thousands, if not tens of thousands of dollars, depending on your home's value. In addition, you get to write off all the interest payments on your mortgage, all the property taxes, all the insurance, your property manager's costs, any maintenance, and any other direct expenses associated with the property. So in most cases, you'll find, especially if you're early in your mortgage, that you'll be net negative at the end of your rental season, even though you've had strong income that was at or above the mortgage payments and expenses you needed to make throughout the year. So very quickly, every month, you'll be getting very excited as that mortgage requirement comes in, and then you have this check coming in from your property manager and you're using it to pay this off. And sometimes you even have a difference left over that you can just pocket and keep tax-free because of all your expenses that you have against that income. So very quickly over time, that monthly mortgage payment that you're making with your tenants' paychecks is allowing you to build equity in the home, and the home is continuing to appreciate over time. So let's say it's a $300,000 home. It's appreciating at 3% a year. You're making $9,000 in equity appreciation in addition to your mortgage payments, which is probably adding another $6,000 a year. So your net worth is growing $15,000 a year just from your tenant paying your mortgage for you. And that's not even counting any income your tenant has above your mortgage payment in their monthly rent dues. So definitely a very good way to create lasting network growth based on your previous real estate. And the great news is you can keep doing this process over and over again. So you buy your first home, you decide you're ready to move, then you rent it. Then you do this again, you buy your second home, decide you're ready to move, and you rent it. And you keep going. And each Social Security number is allowed to have up to 10 mortgages. So very quickly, you could build a portfolio over your working career of 10 houses that you have tenants in and have a great nest egg to provide income in your retirement, to sell the houses in the future and diversify into other investments that pay you income, or do with whatever you wish. You could donate them to your favorite charity if you've reached that level of status and you're ready to give back in different ways to your community. So definitely something to consider in your property management and real estate approach in life. It's a great way to provide quality housing to people. And the more landlords that create quality housing, the better the housing gets and the lower the prices get because of all the competition. So even though you're making significant money and building your net worth, you're also adding a valuable service to the community that helps create better housing options for everyone involved. So thank you for listening. I hope this was valuable to you. If it was, please like and subscribe and comment on the content. And I look forward to providing you more high quality investment ideas to consider in the future.